What is up, guys, and welcome to another edition of the Market Marauder Show. We in the market one trade at a time. Hope everybody's having a great week out there, able to lock in some profits. So today's episode, going to be talking about the Consumer Price Index summary. So CPI data came out and definitely had a huge impact on the market. Overall, we saw a lot of bearish movement. It was a large downward trend in just basically every stock in general in the market. So going to go over the results. First, I'm going to do a shout out to a sponsor, Duck River Coffee. Make sure you guys go check it out. Some delicious coffee. Start your morning. So let's jump into the CPI data. So Consumer Price Index for all urban consumers, or CPI-U, rose 0.1% in March on a seasonally adjusted basis after increasing 0.4% in February. The U.S. Bureau of Labor Statistics reported today, which is on over the last 12 months, the all-time index increased 5.0% before seasonal adjustment. So 5.0 is the number that kind of came out and moved the market in general. And in this video, I'm going to break down all the different sectors and which sectors were higher than others. The index for shelter was by far the largest contributor to the monthly all other items increase. This more than offset the decline of energy index, which decreased by 3.5% over the month, as all major energy component indexes declined. The food index was unchanged in March, with the food and home index falling 0.3%. So let's jump to some of the data. So the first category on here is food. So the food index was unchanged in March. The food at home index fell 0.3% over the month. The first decline in the index in September of 2020. So that's a pretty significant statistic right there. 3 of the 6 major grocery store food group indexes decreased over the month. The index for meats, poultry, fish, and eggs decreased 1.4% in March, as the index for eggs fell 10.9%. So there's been some relief on those egg prices. I know egg prices have been crazy all over the place. The fruits and vegetable index declined 1.3% over the month, and the dairy and related products decreased 0.1%. In contrast, the index for other food at home rose 0.4% in March, following a 0.3% increase in previous months. The cereal and bakery products increased 0.6% over the month, and non-alcoholic beverages rose 0.2%. The food away from home rose 0.6% in March, as did the previous 2 months, and the index for full service meals increased 0.7% over the month, and the index for limited service meals increased 0.5%. The food at home index rose 8.4% over the last 12 months, and the index for cereals and bakery products rose 13.6% over the 12 months ending in March. The remaining major grocery store food groups posted an increase range from 2.5%, which is including fruits and vegetables, to 11.3%, which is non-alcoholic beverages. The index for food away from home rose 8.8% over the last year, and the index for full service meals rose 8.0% over the last 12 months, with the index limited service meals rising 7.9% over the same period. So that's a lot of data, but what does that mean? It basically means that the items that you go and buy at your store or at your grocery store, or local grocery store, went down. Those specific items being meat, poultry, fish, and eggs, as well as fruits and vegetables, all went down during this time period. Overall, in the year time frame, they rose, so it's still high as far as the year is concerned. But in the month of March, they went down. And then also the index for going out to eat rose, which shows a lot of people are switching alternatively to go out to eat instead of buying groceries at home. I think that was kind of like a substitute for the rising prices in the grocery items. Next, let's get into energy. So energy is also a very big sector. So the energy index fell 3.5% in March after decreasing 0.6% in February. The gasoline index decreased 4.6% in March, following a 1.0% increase in the previous month. Before seasonal adjustment, gasoline prices rose 1.0% in March, and the natural gas index decreased 7.1% over the month, following the 8% decline in February. The index for electricity decreased 0.7% in March, and the largest decline in that index since January of 2021. The energy index fell 6.4% over the past 12 months, and the gasoline index decreased 17.4% over the last 12 months, while the fuel oil index fell 14.2% over that span. In contrast, the index for electricity rose 10.2% over the last year, and the index for natural gas increased 5.5% over the same period. So, over the past month, it's been down, but then over the past year, it has been a lot higher. So, over a year time frame, it has been up, and it's up significantly, but it's starting to decrease, and this has been basically like the first month that they've seen a lot of these sectors like energy and food start to decrease. All items less food and energy. So the indexes for items less food and energy rose 0.4% in March after rising 0.5% in February. The shelter index increased 0.6% over the month after rising 0.8% in February. The index for rent and the index for owners equivalent rent both rose 0.5% in March, following larger increases in the previous month. And the index for lodging away from home increased 2.7% in March. So that's basically hotel prices, or Airbnbs, or wherever you stay where it's not your home. The shelter index was dominant factor for the monthly increase in the index for all less items, food, and energy. Among other indexes that rose in March was the index for motor vehicle insurance, which increased 1.2%, and the index for airline fares, which increased 4%. The indexes for household furnishing and operations, new vehicles, education, and apparel also increased in March. And in contrast, the index for used cars and trucks fell 0.9% in March, constituting a recent downward trend. So there's a downward trend in used vehicle prices. The medical care index fell 0.3% after falling 0.5% in February, and the index for hospital services fell 0.4% over the month after being unchanged in February. And the index for physician services continued to decline, falling 0.2% after declining 0.5% in February. And the prescription drug index increased 0.1%. So services in the medical field went down as far as inflation is concerned, but the prescription drug prices went up 0.1% in the month of March. The index for items less than food and energy rose 5.6% over the 12-month period. The shelter index increased 0.8%. Increased 8.2% over the last year. So over the last year, shelter has gone up, accounting for over 60% of the total increase in items less food and energy. Other indexes with notable increases over the last year include motor vehicle insurance, which is up 15% on the year. Household furnishings and operations is up 5.6%, and recreation is up 4.8%, and new vehicles are up 6.1%. So these are really the categories that have seen the most increase in inflation in the over the span of the year, according to the CPI data. And so it's definitely interesting to see which categories kind of, hold the most weight. Ultimately, I think the, market may potentially bounce back from this. Overall in the day, if we look at like S&P 500, or if we look at SPY, it was down 0.41%. But towards the end of trading, it started to go back up. So there may be a bounce after some of the CPI data comes out, and we may see the market continue to go back and rally. One catalyst for the market potentially rallying is there are going to be a lot of earnings that are starting to come up. There are banks that'll be giving earnings on Friday. So a lot of the banks like JP Morgan, which is a large investment firm, you have Wells Fargo, and Citigroup will be giving their earnings on Friday. And so that's going to be a lot of attention on the banking sector, which kind of begins the trend of a lot of earnings. And then the week after, you'll have Tesla, which is one of the earnings a lot of people are looking at to see if Tesla's margins are up the cuff, especially considering there's so much mixed signals coming out. I think there are a lot of moves that Tesla is making, like having a battery factory or a mega pack factory starting to develop batteries in China. But there's also, things against them, like the new uh, requirements for the EV tax. So, it's kind of a hit or miss, but I think ultimately the numbers on their earnings and the margins that they have, if people actually look at them and start to dive into them, it'll kind of give the true picture as to where the company is and how the price cuts have helped the company grow in the long run. So hopefully that video helped you all make a more informed decision. Bear in mind, it's not investment advice. I'm not telling you to invest or not to invest into any of the plays mentioned in this recording. And also bear in mind, some of the prices of these may be different, but ultimately the CPI data, you can go look it up. It is available on the BLS.gov, which is the U.S. Bureau of Labor Statistics website. So make sure you guys go check it out. You can go read it for yourself. A lot of good information. And as far as a macro level is concerned, it is something that helps move the entire market. So CPI data is a very important number. At least some people trade on CPI data. It's kind of hit or miss. Sometimes you may trade, okay, it's going to be bearish. Sometimes you may be trade, it's going to be bullish. It's kind of a 50-50 return on the two, depending on how your trading style is set up. If you're a long-term trader, ultimately it may not may not matter. But if you're a day trader, it's definitely a number that a lot of people look forward to and a gauge towards how the economy is going. So good luck to everybody out there trading, and I'll see you guys on the next one. Peace.